Well, hello there. Hello. Thanks for stopping by the channel. Welcome to WTF Mortgage. Thank you for checking out this video. This is going to be a really quick update for the entire week of March 3rd, 2025. And if you are watching this on a cell phone, I recommend that you put your cell phone in landscape mode to make it easier to see these numbers that I'm going to show you. So let's get right into it. All right, folks, here we go. Here we go. Check out the yellow arrows here. See the yellow arrows on the top and the bottom? Those arrows are pointing out the full range of available interest rates on each of those days. The 4.25 on up to the 7.625. These are the rates available to every bank, every lender, every brokerage, every credit union across the country without exception. They have this full range of available rates that they can be advertising. However, you are not going to see them advertising throughout the full range of available rates. You are going to see them over this past, say, 2 weeks or so. They're going to be advertising within the 5.875 to 7% range, with maybe a couple exceptions. Most of the companies, though 99.9% of them, will be advertising between the 5.875 to the 7% range. I call that range the Goldilocks zone. And I call it that because this is the range of available rates that's most attractive to the consumers out there. And the reason why it's most attractive is because the closing fees are low enough and the rates are low enough, and that range attracts the most consumers. So that's why all of the companies are going to be advertising in that range. When you go online or wherever you're checking out mortgage rates, which is most likely going to be online, this is where you're going to see everyone advertising, all right? So if you, or I would say if I had a 30-year fixed rate at 7% or above, right now I would be eyeballing the 6.5 and the 6.625 rates. Now, I know you see those lower rates there, so you're like, hey, man, why the hell would I just be checking out the 6.5 or the 6.625? Why not the 5.875 or something lower? And the reason why is the 6.5 and the 6.625 rates, those are the rates right now that are in the no cost or low cost zone. The strategy behind this is get what you can while the getting's good. You do a no cost or very, very low cost loan right now, and then when the rates drop down again, you refinance on these because we are in a downward market right now. Now, I'm going to review what happened last week really quick, but we spiked up, all right? We were progressively dropping down for the past 5 weeks. And then on the 3rd of March, as you can see, on the 3rd of March, we hit the lowest point that we've been in months. And then, of course, with what's happening in the U.S. right now, things spiked up on the 3rd, 4th, 5th, and 6th, and 7th. This is going to go back down. That spike was only temporary. We always had, this always happens, whether you're in an upward or downward trend, we're taking a few steps forward, one step back, few more steps forward, one step back. This is just one of those steps back. Don't sweat it. And if you are trying to target something like a 5.875 or 6% rate, you're going to have to wait too long for that to happen, because my prediction is that we're going to see 5.875 or 6% by the end of this year, like say November or so, October, November, maybe the first part of December. I think the 5.875 and the 6% rates are going to cost around the same price as what the 6.5 and the 6.625 rates are right now. So if you're like, well, hell, man, why don't I just wait till the damn rates drop down to the end of the year? Well, the reason why is because even though my predictions have been right for the past 2.5 years, spot on, there's no guarantee what's going to happen. We might not see those lower rates. So you get it what you can get now while the getting's good. The other thing is you can save money while you're waiting for the rates to drop down lower. You refinance it at a no cost or very low cost right now, and then you're saving money. You're not sitting there with that same 7% rate or higher, waiting and waiting and waiting, wasting interest every month. So you refinance now, and or I should say when the 6.375 or 6.5 and 6.625 drop back down to that very low cost or no cost range, because they're right there. And I'm targeting those rates because I know that's what's going to show up on the map first for no cost and low cost loans, because we already hit that on the 3rd. So, and it also will help you focus on something so you're not getting confused with all the other things out there. So you focus on, I would do this, focus on the 6.5 and the 6.625, wait for that that pricing to hit where it is on the 3rd. I mean, you actually could move on the 6.625, something like that right now. It's very low in fees, but if you want to maybe roll the dice a little bit, you could wait till the 6.625 and the 6.5 gets closer to what the pricing was on the 3rd of March. All right. So, that's what I'm recommending right now. That's what I would do. I mean, obviously you do what you want to do, but after 27 years now, February 13th was 27 years doing this. You see the same patterns happening over and over again. So drop any questions that you have in the comments. If you have some, put them in the comments so everybody can benefit from the questions. And I will see you on the next update or whatever next video that I do. Take it easy.